Alrighty, this is going to be the weekly outlook for March 31st to April 4th. It's going to be the end of the month. We also have the end of the quarter as well, which is nice. Let's get right into exactly what we're looking for coming into this week. There's a lot of things to talk about with the overall markets dumping on Friday. There's a very good chance on Monday we're going to have this gap down, so we'll take a look at that. Most likely, this weekly outlook will just be kind of a rough outline of what we're looking for because come Monday morning, most likely things are going to change. So make sure to be at the pre market come Monday morning. So, key economic events, first things first, on Tuesday. What we do have is some ISM jolts. Wednesday, we have some red folder news at 8:15. Thursday, we have some unemployment. We also have ISM. And then on Friday, what we do have is some unemployment rate, non-farm enrollment as well. Plus, we have Fed Chair Powell speaking at 11:25. So really, don't really have too many major red folder news events. The next major one, I think, is in a few weeks. That's going to be CPI. So let's get right into the charts. So, first things first, thesis for this coming week, nice rejections on the overall markets off the previous level of support, now acting as resistance towards the downside. You can see that the markets had a sharp reaction off that level, and now we're moving back towards the downside. You can see that the ES is now going to be opening up at the low of the range this week. What I would like to see is a reaction that we have off of your 55.50 level. So, for the ES, as you can see right here, the key levels I have marked out in this case really is this previous level of resistance. Sorry, previous level of support, as you can see right here. Now we're turning this into resistance. This is your up close candle. This is the area that we end up touching last week, and then we end up having a nice reaction off that level for this continued push towards the downside. So really coming into this week, we end up rejecting off the highs last week. We end up having this nice push lower on Wednesday, and then on Friday, we end up having this nice push lower underneath its previous day's low. Underneath its previous day lows, we end up having this nice push lower. Now we're underneath what? Your March 17th weekly lows, which was 2 weeks ago. And now the next logical level is all the way towards the downside, which is your March 13th low. So coming into Monday, most likely we're already going to have a pretty big gap down on the overall markets. If we don't have a gap down, this is good that we can look to trade it in towards this March 13th low. So coming into Monday morning, what we'll keep an eye out on really is these two levels, which we have the March 17th lows, and then we also have your March 13th low. So coming to market open on Monday, if we're not already at the March 13th lows, then we could be looking to trade in towards that March 13th low. If we're already inside of the March 13th low, let's say price opens up here, then we have to be a little bit cautious in case we have this bounce right back at this key level. Sorry, one second. Sorry, I had to do something right there, so I had to cut up the video, but we're back. So that's the key levels, and that's what we're going to be looking at for the ES. Let's go on to the SPY chart. So SPY chart coming into this week, if you go into the SPY chart, as you can see right here, I actually do not have that marked out, but we can go back into TradingView here. Let's go into the daily time frame. So for the SPY chart right now, what I said was, you can see that the SPY is rejecting off the 573 on the higher time frames, along with the rest of the markets who are now pushing back towards the downside. You can see that the key levels now is the low from March 13th. That's what we'd like to see coming to next week, is a hold underneath the March 17th lows for a push towards the downside. So similar to the ES, really what we're going to be doing now is looking for the hold underneath your March 17th lows. So coming into next week, this is a clear level of support that we like to see now turn into resistance for this continued push back towards the downside underneath your March 17th lows. We should see this push down in towards your March 13th lows, which would be a nice push towards the downside. So this is basically the exact same thing for the SPY. So no need to go over this one once again. Now let's go on to the next charts that we have. The next charts that we do have in this case is NQ. So the thesis for this coming week, nice rejection on the NQ off the up close candle, daily candles. On the higher time frames right now, you can see that we're pushing towards the March 13th lows. We're closing at Friday's lows. Most likely by the time market opens, we'll be below that at the new level being the 19070 level and below. So coming into Monday on the NQ, as a lot of these tickers as well are most likely just going to be already underneath these key levels. So coming into next week, the key levels that we have marked out is going to be this 19,361. If we open up underneath this level, really the next level towards the downside is all the way towards this 19,115 here on the NQ. So you can see this is a clear level of support that we bounced off of. This was from March 13th. You can see really sharp reaction on the NQ, pushing price in towards this key level. So now coming to next week, if we open up underneath your March 13th lows, now we like to see this level be used as support, now turn into resistance for this continuation down towards the next level below, which is going to be that really that 19,000 key level here on the NQ. If we go on to the QQQ, the levels that we have in this case is going to be this 466. If we cannot bounce off this 466, then we're going to see some more continuation towards the downside on this ticker, towards the downside. And the next key level I have is really 460 and all the way down towards your 450 and below. So let's go on to the next charts that I have. The next charts that I do have here is Tesla. Right now, you can see that Tesla had a nice push towards the upside last week after filling its major gaps towards the downside. You can see that last week, Tesla is holding up compared to the QQQ. What I like to see coming to next week is the reaction off that gap on the daily time frame from last week. So if we go into the Tesla, the daily chart, as you can see right here, what we did was we filled that gap. So we filled that major gap that we had all the way down towards that 217. So we filled that main daily gap that we created. And now you can see the past 2 weeks, we had a nice pushback towards the upside. And really, we just came right back in towards your up close candles, your 300, 298 here on Tesla. And now we're pushing back towards the downside here. So coming into next week, what I really want to see is the reaction that we have off of your key level being your 264. So your 264 is really key coming to next week. And then we also have your March 12th weekly highs, which is your level that we gapped above. So if you go on to the regular trading hours here, you can see we had a key level of support turn into resistance, and then we had this gap towards the upside. So coming into next week, what I like to see is really the reaction that we have around this 263. If we break underneath, hold underneath your 263, we can see this push back in towards this gap that we created over the March basically 12th highs, which is this gap that we created last week. And we can see this push back down in towards that key level. If we end up holding this 263, then you can see this push back up and towards potentially your November 6th. But the key level really now next week that I like to see it gravitate down towards is going to be this March 12th weekly high. So go back onto the extended trading hours. This is going to be the key level coming into next week here on Tesla. For some other charts that we're looking at, NVIDIA. Right now, you can see that NVIDIA is breaking towards the downside. This one is relatively weak compared to the overall markets. Once it broke underneath 116, you can see it's moving towards the lows. What I like to see is a reaction off the lows compared coming into next week. So for NVIDIA, if we go on to the daily chart on NVIDIA, the key levels that we have in this case is going to be what is your 118. And then we also have your 110. And now the next key level towards the downside is all the way back towards your 104. So if I go back onto the 1 hour chart here, you can see for NVIDIA, these are the key levels I have marked out so far on Friday. We end up having this break underneath this 110. If we stay heavy now underneath your 110, what I like to see is the fade back down in towards your 107 and potentially below, which is your 105. So key levels, at least coming into Monday, is going to be this 110 level that we're going to keep an eye out on with the overall market as well. Now we can go on to the next chart. Next chart we have in this case is Apple. Right now you can see that Apple is holding while the market is dropping. Qs is at the lows while Apple is lagging behind. What I like to see coming into next week is the reaction that we have off the 220 level on this name. If we break and hold underneath 220, we will see continuation towards the downside towards 208. So for Apple, the key levels that we have really is this previous level of resistance that now is going to act as support. So the key levels here on Apple, I have a couple key levels drawn out, but the major one was this level right here, which is your 220. This is your previous, you can see this a little bit better here, but previous level of support that we wanted to see it get above. You can see it got above. Now we're actually getting back underneath. So we get back underneath this 220. We can see this continue push back towards the downside here on the overall market. So coming into next week here on Apple, what I like to see is really the hold underneath this March 19th highs now. So this was the key level coming to last week. You can see nice push up Monday, Tuesday. Basically, this was your March 19th highs, multiple touches here as well. Now we're underneath your March 19th. What I like to see is a hold underneath your March 19th for this continued push towards the downside, towards your 250 and potentially below. So this is going to be the key level coming to next week. Basically, your last week's lows in combination with your 2 weeks ago's highs, which is your March 19th. Now let's go on to the next charts that we have. The next charts that we do have is AMD. Thesis for this next week, big rejections on AMD off the 115 key level. That was the area that AMD rejected off of before in late February. And now you can see that we're having a big push lower off that level once again. Next level of support is 100 key level. If we break under, we will see 94 lows. So for AMD, as you can see, really the higher time frame key level is this 116. This was your previous level of support. And now you can see this level is being used as resistance. So if you go on to the daily time frame, clear levels of support that end up turning into resistance from earnings as well, key levels, and then another rejection off this 116 level, really sharp reaction. And now you can see we're continuing to push back towards the downside. So for AMD, big moves lower here. The key levels I have marked out now is going to be this 102. So this 102 level is really solid. Basically your 2 weeks ago's lows, and then 3 weeks ago's your highs, multiple touches around this key level. So for AMD, this is going to be the reaction that we're going to be looking off of coming to Monday morning. If we're already underneath your 102, we're going to be looking for the retest off 102 for continuation towards the downside. If we end up holding this 102, we can see this mini bounce on AMD back potentially towards this 106. So we'll keep an eye out on AMD, the reaction that we have off of your 102. For some other charts here, we have Meta lower high created on a bunch of these names on the daily time frame. Right now, you can see that Meta is leading towards the lows. This one is also at the 570 lows. Next level on the lower on this name is going to be all the way down towards 550. So for Meta, key level, as you can see right here, that I have drawn out is your 556. So your 576 is really key here on the higher time frames. You can see multiple touches here. If you get underneath coming to Monday morning, we're going to be looking for the hold underneath. Now it's going to be your 580 for this continued push towards the downside here on the overall markets. So that's going to be the key level coming into Monday here on Meta. If you go on to Amazon, nice pop after filling the daily gap on Amazon. Now you can see the first pop is being sold into. What I like to see on this name is the reaction off the lows. If we can get a candle closure underneath 192, we can see a push all the way down towards 188 on this name. So for Amazon, key levels that we have marked out in this case is your 190. So your 190 here is really key on Amazon. We've already had multiple touches here. That's also your daily gap as well. So if you go back onto the 1 hour chart, you can see Amazon, really nice reaction here off of your 206. Had another key level, which was your 200 as well. You can see once we broke underneath 200, next logical level is this gap, and really the key level, which is your 190. So your 190.40, super key here on Amazon. If you cannot bounce off your 190.40, we're going to see, potentially we can see this nice bounce off this level. If we get underneath your 190, we're just going to see some more continuation towards the downside here on the overall market. So really coming to this week, it's just a very rough outline, just due to the fact that the SPY QQs most likely by the time market opens, we're going to gap already underneath these levels. So whatever I say now is going to most likely be irrelevant. So it's really going to be important to show up to the pre-market preps this week because there's a lot of volatility. We end up having a super solid trading week last week with nice volatility in the markets that just presented a lot of opportunities. I expect this to continue as well, with the Qs end up most likely going to take out this weekly low. So that is going to be it for me today. Hope to see you guys all for the pre-market prep on Monday. All right. Have a great rest of the weekend, guys.